Welcome back. You're tuned into Bazaar Morning Call. Well, if you're just joining in, the good news is that the global cues are positive, and the better news is Sonia Shenoy has joined us in the studio as well. Sonia, good to have you.
Well, thanks a lot. Morning, Nigel. Morning, Prashant. Morning, we all love the monsoons, but with the monsoons comes a lot of other things like traffic jams and all of that, and it's hard to sort of... Today, I felt like I was in an Indiana Jones movie, trying to make it on time and using this road and that. But in any case, looks like it's going to be a good day for the markets as well. All eyes will be on the first tick this morning, which all indications are that the GIFT Nifty is showing a 30-point up move. But our research team is joining in to talk about many stocks. Of course, IndusInd Bank is top of mind because of a very good set of numbers. Abhishek is here with us to give us the fine print. Abhishek, morning.
Morning, Sonia. So it's an absolute serene results coming in from IndusInd Bank. The balance sheet risk is at the lowest in last 7 years or even more. So what has been good in the results over the last few quarters is that it is perhaps the only bank to see a YOY and quarter-on-quarter growth in operating profits for 10 quarters in a row. So net interest margin is at 8-year high on a quarterly basis, coming in at 4.29%. The RWA or risk-weight asset to advances ratio at 111%. Is perhaps the lowest in last 7 years or even more. It used to be around 125, 130%, a few years back. So annualized slippage ratio of just 1.9% is perhaps the lowest in last 11 quarters and second lowest in last 16 quarters. So asset quality continues to improve. Gross NPA ratio of 1.94% and net NPA ratio of 0.58% are perhaps one of the best that you are seeing in last 10 quarters. What has not been good in the result, which we already know from the business update, is that CASA ratio has dipped below 40%, so it's the lowest that you are seeing in last 6 years or 24 quarters, and cost to income ratio has inched up a bit to about 45.9% when compared to 44.9% in the previous quarter. In terms of P&L performance, NI is ahead of our poll while PAT is largely in line with our poll. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. But Abhishek, you're also tracking another banking name. That's Federal Bank. Tell us more about their fundraising plans out there.
Nigel, they have had IFC which will invest about 959 crore into the bank via preferential allotment. So this is a preferential capital coming in to the bank. So IFC will take its holding in the bank to about 8.1% post the fundraise from 4.95% that they had earlier. What this fund infusion does in terms of mathematics is that Tier 1 ratio will increase to 14.36%. It was at 12.54% earlier. Equity dilution is about 3.4%. Net worth will increase by 4.5%. Book value will increase by 1% to around rupees 107 per share. A Federal Bank may look to raise more money in the coming period or in the near future as well. Back to you.
Okay, well, Abhishek, thank you very much for that. Now to the, I think, one disappointment that we had. Results came right after markets closed yesterday. Rima is here to talk about L&T Technologies. Rima, hi, morning.
Hi, morning. So there is a big revenue miss. The company has reported a dollar revenue growth of 9.8%. This is much lower than consensus expectations of 12.5% growth. So a big miss on the top line. The problem is their organic revenue growth. Remember, the company's top line has been boosted by an acquisition, SWC acquisition. But if you strip that out, organic revenue growth has come in below consensus at just 0.6% on a quarter-on-quarter basis. Margins have fallen by 100 basis points to 17.2% on account of the integration costs. But at 17.2% margins, it's slightly better than what the street was anticipating. The company has held on to its full year guidance. So they're still maintaining that they will do a 20% top line growth, though analysts believe it could be a bit challenging given the ask rate and the soft Q1. Management says it was the delay in decision making in Q1 which impacted the revenue performance, but there has been an improvement in decision making in June and July, which is why they're hopeful and confident that Q2 will show an acceleration in growth. Back to you.
Okay, thanks a lot for that. So big revenue miss coming in there, lower than expectations. The street would react to that. But let's find out how ICICI Lombard did in their results. Surbhi has more details on that. Surbhi, over to you.
Thanks so much for that. So when it comes to premium growth, it was pretty much in line with estimates, but the PAT was below estimates, and that is largely on account of higher losses due to cyclone. So the premium saw a growth of 19% on a year-on-year basis. PAT was up 12% on a year-on-year basis. The combined ratio came in at 103.8%, but if you exclude the cyclone impact, it stood at 102.9% versus 104.1% same time last year. The claims ratio also were a little elevated due to the cyclone, but management continues to maintain the combined ratio guidance of 102% by FY25, but they also indicated the claims ratio will be a little elevated due to floods in North India, and that impact will be seen in Q2. So we'll watch out for that as well.
Okay, all right. Thanks for that, Surbhi. And we'll also be chatting with the management of ICICI Lombard General Insurance later on in the show at 9:50 a.m. Well, let's hop across to Sonal. She's joining in to tell us about a couple of other numbers that came out, Himadri Specialty as well as CIE Automotive. Sonal?
Thank you so much for that. Well, both of them reported strong set of numbers. Let me start with Himadri Specialty Chemicals. It was a good set. Revenues declined by 9% on a YOY basis, but if you look at the EBITDA and margins, there was an expansion of around 600 basis points. Profits were up 123%. Their gross debt has also declined on a quarter-on-quarter basis to come in at 682 crore rupees. The company has acquired 12.8% in Secono Limited, which specializes in silicon anode technology, which is used for lithium-ion batteries. So this is one expansion that they're planning as well. If we talk about the other name, which is CIE Automotive, their revenues were up 4.7%, EBITDA was up 21%, margins were higher by 300 basis points, leading to a profit growth of 60%. Those numbers were good as well.
Okay, well, thanks very much, Sonal, for that. Now, let's talk about earnings from the media space. Network18 and TV18 broadcast both reported numbers for the first quarter. Surbhi is here with details. Surbhi, morning.
Morning. So it was a mixed set of numbers from them. They showed a strong revenue growth, but the operating costs were higher, which led to operating losses. But operating costs were higher, driven by investment on expanding content coverage and also the distribution reach. So operating revenues were up 142%. TV18's operating revenues were up 26%. The entertainment segment was up 184%, and the digital was down 16% on a year-on-year basis. Operating losses on a consolidated basis came in at 84 crores versus 75 crores. The TV18 news losses were 6 crores versus a loss of 4 crores, and the entertainment loss was 49 crores versus a profit of 62 crores same time last year. The net profit was down 26% on a consolidated basis.
Okay, thanks for that. Well, Amara Raja Batteries has been in focus for the last few days on the back of the block deal. Vivek has more details on that. He's also tracking Rallis India this morning. Vivek, good morning.
Well, both the stocks are on our radar on the back of, large blocks that happened in yesterday's trading session. Like we mentioned yesterday, Amara Raja, Clarios ARBL Holding, that held a 14% stake at the end of the June quarter, yesterday completely exited its stake, so now it's a clean out trade. Some of the key buyers included Societe Generale, picking up almost 2.5% in the block deal. BNP Paribas, arbitrage fund picked up almost 1.5%. Tata AI Life Insurance picked up over 1%, and some of the other key buyers include domestic mutual funds like Kotak Mahindra as well as Nippon India Mutual Fund. Now, coming to Rallis, very interesting block deal over there. Rekha Jhunjhunwala, sold almost 4.99% stake. The entire stake was lapped up by Tata Chemicals. Post this particular stake by Tata Chemical in Rallis India, their stake has now increased to over 55%. Rekha Jhunjhunwala also sold 0.5% stake, but the buyer was, Ratnapali Investment. So almost 5.04% stake sold by Rekha Jhunjhunwala in yesterday's trading session in Rallis.
Okay, we'll watch out for all of these names. Thanks a lot. Here's a quick recap of our top stocks in case you missed out on any. Of course, stock of the day could be IndusInd Bank, post very good numbers. Then you have Federal Bank, ICICI Lombard, Himadri Specialty, CIE Automotive, Network18, TV18 Broadcast, Amara Raja Batteries and Rallis India. While the only stock on our radar with negative news for today is L&T Tech. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, what's been happening?
Thank you for that, Sonia. Well, we are looking at some support coming in for the industrial commodities. I'll start with crude, where the prices did gain 2% overnight. The markets are anticipating the U.S. inventories to show a decline. That is because the output has seen a decline, and also because this is a summer driving demand season. You could be looking at some support because of that as well. Also, China officials suggesting policy rollout to support local consumption is a positive to watch out for. The other sector which has done quite well for itself has been the precious metals. The gold prices surged to a 7-week 5-week highs in the overnight market. This is after ECB has signaled a pause on rate hikes from the month of September, and we've seen the Canadian inflation numbers also come within that range. The street will watch out for further data coming in from Europe in this week itself. Meanwhile, it also is about decline that we've seen in sense of production when it comes to gold and silver. That seems to be supporting as well.
Okay, well, Manisha, thanks very much for that. That's Commodities in Focus. We'll take a very quick commercial break here. Devin Choksi will be with us with what he makes of some of these earnings which have come through to begin with and what he likes in the market. We're back with that. We'll also have the CEO of Healthcare Global Enterprises to discuss their expansion plans and the outlook as they see it. Stay with us.